Hey everybody, welcome to the weekend edition of the Daily Market Commentary. It is Friday, the December 1st. Hope everybody had an absolutely great trading day and a great trading week. This is going to be our weekend version, if you will, of the Daily Market Commentary. So maybe we'll go over some bigger picture timeframes as well. Some interesting movement that we had in the markets today. For those of you that are new to the channel, we do the same thing every day. We go over the same 10 to 12 futures markets. We identify good trading opportunities in those markets, things that can or may work out in the future, and then we update some potential levels going forward. What I'm going to do a little bit today, though, because it's the end of the week, is I'm going to look at some bigger picture time frames as well, and maybe add a couple of exchange traded funds and ETFs to that. You're going to see working on a little bit more formalization of this daily market commentary and putting a little bit of structure around it. So we'll get right into it. So let's go ahead and get rolling. Now, today was a big day. Today we had the announcement from Michael Flynn, and that really moved the markets today. But we're going to start with the S&P. Now, looking at the S&P, when you look at this, you go, oh no, that level got blown through, and then this one worked. Well, not so fast, my friend. So one of the things about these purple levels, and I had somebody email me this today. What's the difference in a purple level and a green level? Well, remembering that the purple levels are small time frame levels, small time frame opportunities. And so this small time frame level, when you get into this thing, your target's going to be probably right around this area here where you've got your opposing fair price level away from this support. And so price came into this area, started to move away. Matter of fact, here's what was interesting, is that we had, for those of you that are not doing so, it would make sense to follow us on, or follow me on Twitter, because that is where I put the update. So it's funny, I posted this update right here about how the market really held that level, moved up, and it was looking profitable, time to close out, make some money, do your Friday happy dance, doing great, right? So you're out of that thing. Well, then, literally, maybe 30 minutes later, Michael Flynn comes out and pleads guilty, and the markets go, whoa, skadoosh, and they come screaming down, at a huge pace. But take a look at this. It came screaming down right into the fair price area that we had marked off from earlier this week. Now, this was the area that we had marked off from earlier this week. You can see that it's right here, and then all of a sudden, the next tweet that we put out a little bit later, price came screaming down into here and moving up. Now, I'm not putting this up here to show you, hey, look how well we did. That's great. What's more important is that we have a plan, and we followed the plan. And none of this other stuff down here was really relevant to us getting in. And so the only thing relevant to getting in was this area down here. Now, why did this work? Well, I believe that this was a fair price area, and it was the area where there was definitely more support right here, as it acted as kind of resistance in the past and was a prior breakout potential. So breakout trades are typically very, very powerful places for reversals. That was a breakout long that yesterday I talked about on the recording. I felt bad that I missed it, but it's still a valid area. And look at, lo and behold, we came down, hit that area almost to the tick, and it's rallied up about 40 points almost since that bottom in the S&P. So obviously now this level is completely gone. We gotta get rid of this colored area. This is no longer valid. This one is still valid because we just did what I call a touch and go. We just did a touch and go out of that area, and so I think that that's going to create more buy orders in here, and more, fundamentally, people are just going to see that 2,600 whole round number and be comfortable down in there. Now, let's look at the S&P on a bigger picture time period. So let's go to the daily chart, and I'm going to switch off the ES here and just go to the SPX, only because I don't want to have all the lines on here and disrupt all the lines. So looking at the SPX itself, the actual S&P on a daily time period. So looking here at the S&P, today we had this big move that came down right into here before then, boom, popping right back up. This is a very strong reversal candlestick. That's what this is. It's a very strong reversal candlestick pattern. But this typically, we typically see this reversal candlestick pattern happen after a move down. We've seen it have to come after the move up. Now, when I look at this on a bigger picture scale, call it the weekly time period, I firmly believe that we would be very healthy with a pullback into this range. I got to tell you, we pull back into this range, this 2,500 range, and I'm throwing money at it because I believe, education only, by the way, I'm just saying that as an analogy. This is an area where I believe is a high probability turning point for future market, reversals, simply because it was acting as this area here of resistance. We broke out of that resistance area, and we've got another one here that's become. We stayed in there, about a month of just kind of sideways price action before these last little bit. So I still think that this 2,500 region is pretty valuable. I've been saying for a long time that my bigger picture line in the sand is a bit lower. Everybody I talk to at our firm at IIA Financial, we talk about where kind of the line in the sand is, and it's been below some of these monthly fair price areas. But I'm thinking about moving that thing up simply because we are starting to show a little bit of there's a little bit of fear, I guess, in people's minds about where the market's going right now. I'm not overly concerned with it. I still think that there's a lot of good buying, and you just buy on the pullback, and that's really kind of what it's told us so far. So that's the small time frame and kind of the big picture perspective of the S&P. Let's go take a look at the Nasdaq. Now, the Nasdaq, yesterday we drew this line and said this becomes a good breakout point to get long, and we never came near it. Notice also today we didn't come anywhere near our potential reversal point. So there's nothing that should have affected you today in the NASDAQ because none of these, in my mind, were high probability areas to get short or to get long. And so, didn't participate in any of this NASDAQ movement today. We didn't have any of that marked off. I wasn't in love with any, hindsight being 2020, maybe should have liked this area a bit better. Hindsight is always 2020 or whatever it happens to be. But didn't work out that way on that one. Crude oil's not come anywhere near where I'm kind of interested in it yet. Am starting to get a bit more interested right in this range here. I had talked, I think it was earlier this week, about this being a potential reversal point right through here, but I left it off of the lines because I wasn't a huge fan of it. I thought we could get a bit of reversal, which we did, but still nothing on there that's really floating my boat. Now, this one, I did expect a little bit of a reversal in gold off of this area. The Michael Flynn news, which drove the markets straight down, drove gold straight up and blew us right through this region. So this region did not hold on that strong news announcement. But I'll take 2 winning S&Ps over 1 losing gold any day of the week. And that's kind of the way that one was set up. Now, the good thing about that is you can have your stop loss in place to get you out of the position, so that you don't get crushed. But I did anticipate a reversal there, didn't come, and so now I'm going to hold off just a bit on really putting anything else out there in gold for the time being. Looking at our bond markets, so starting with the bonds. So today we got a little bit of a reversal in our bonds as price wicked up into here and then came back out. So depending on where you place your protective stop, I will tell you I did not have this one automatically preset. Did not have it automatically preset, and we're going to see some rollover coming in these things here. This is off of the rollover right through here, this rollover gap, but I didn't have this one automatically preset. So, many of you, if you put your stop above this pivot, we're probably going to be okay. If you just put it right above this region, got stopped out. So that one was one of them that, similar price action to gold in there. Now I can't leave this area on here any further. So I've got to remove that bond area. The Australian dollar, that one is working out just fine as far as that position goes. So that one hit the area that we had identified yesterday and is starting to roll off of there very, very nicely. Not a tremendous amount of momentum out of there. So some of you may close that thing out over the weekend. You don't want to hold it over the weekend. That's completely up to you and your risk tolerances. But that one is coming down nicely out of there. The euro. So in the euro, we talked about this being a potential breakdown point if we can get below it. We've not been able to get below it since yesterday's recording. And it's still kind of in play, and we certainly didn't reach up to the upper level as well. And then the Canadian dollar, yeah, this one just blew right through. So on that announcement today, boom, the Canadian dollar completely blew right through the level, and so that level did not hold. I'd love to give you a better reason why it didn't. It just didn't. And, but this is, if you notice, the same news announcement affected some trades negatively, affected some trades positively, but the trades that it affected positively, you should be making more than the ones that you're losing on the negative side. And that's really, that's the game. That's how it's played. Last two markets that we're going to look at here are the Great British Pound and the Japanese Yen. So looking here at the British Pound, we didn't come anywhere near the level that we had set forth. There's just nothing on here that's exciting me. And I do try to look for something that pops out at me, but there's really, I've been contemplating this region down here. Nothing is still popping out at me in there. Same thing in the yen. Still got this area way down here in the yen. This one right here is also something to consider, kind of for the future. We're not quite anywhere near it yet, so I'm gonna put it on here just to see if we maybe can get there next week. So with that being said, I'm going to turn this thing off for today. I hope everybody had a great trading day, a great trading week. If you've got any questions or anything we can do, certainly feel free to reach out, chuck@iiefinancial.com. Thank you so much for all of you joining us today, and I will see you soon. Later.